Hello and welcome to News Hour on SOUQ News TV, where we bring you latest business and economic news from around the world. But most often we begin from Nigeria. But before then, here are the headlines. Hello and welcome. It's always a pleasure to have you join us on News Hour on SOUQ News TV, where we share with you business and developmental stories from around the globe. But today, let's begin from Nigeria. The Ministry of Finance and TechnoServe Nigeria are exploring potential collaboration to boost food and nutrition security in the country. During a recent visit by the TechnoServe Nigeria's team to the Ministry of Finance, programs and impact were showcased, emphasizing alignment with the ministry's priorities and policies, particularly in engaging the private sector. Led by Ayodele Tella, our Senior Program Manager for Food Fortification, the delegation presented TechServe's mission achievements and extensive preference in Nigeria, emphasizing community empowerment across diverse value chains to combat poverty. Toby Durotoye, TechServe Deputy Programs Director, highlighted the Inspiring Good Nutrition Initiative through Enterprise IGNITE program, focused on fortifying staple foods like rice, wheat flour, and edible oil through the Millers for Nutrition Coalition. Minister Wale Edun expressed optimism for a productive partnership stemming from the visit, envisioning mutual benefits in enhancing food security and economic development. Away from that, Nigeria is set to receive a $1.05 billion loan from African Export-Import Bank, Afrexim Bank, as part of a $3.3 billion repayment facility structured by the Nigerian National Petroleum Company Limited, NNPCL, according to Bloomberg. The loan will be repaid using crude oil cargoes from the NNPCL. Afrexim Bank's Senior Executive Vice President for Finance, Administration and Banking, Denny Denye, confirmed that crude availability has been verified and the bank will release the remaining balance next month. This financing arrangement, backed by Nigeria's oil reserves, aims to provide crucial funds to stimulate the country's economy and alleviate foreign currency shortages. The influx of foreign currency is expected to stabilize the local foreign exchange market, facilitating smoother importation of goods and promoting economic activity and growth within Nigeria. Still in Nigeria, the Nigerian government, in partnership with the African Union through the African Union Inter-African Bureau for Animal Resources, is initiating the development of a national blue economy strategy for Nigeria. Minister of Marine and Blue Economy, Adegboyega Oyetola, made this announcement during a stakeholders consultative workshop held in Abuja yesterday. Highlighting the significant potential of Nigeria's marine resources, the minister emphasized the approval of an expanded partnership committee on sustainable blue economy to craft a strategic plan. This development led to the establishment of the Ministry of Marine and Blue Economy, signaling a dedicated effort to harness and manage Nigeria's marine resources more effectively. The Nigerian House of Representatives says it will intervene in the recent increase in electricity tariff by the Nigerian Electricity Regulatory Commission when it resumes on April 23, 2024. This was reviewed by the Deputy Speaker, Benjamin Kalu, while speaking to newsmen in Umuahia, Abia State. The lawmaker noted that the Parliament would find a way to resolve the issue. And away from that, the Central Bank of Nigeria, CBN, has introduced a new regulation prohibiting the use of foreign currency denominated collaterals for Naira loans, giving banks a 3-month window to phase out existing loans backed by such collaterals. This directive, communicated in a letter from CBN's Acting Director of Banking Supervision, Dr. Adetono Adedeji, aims to address concern over the use of foreign currencies as security for Naira-denominated loans by bank customers. However, certain exemptions to the bank loan include Eurobonds issued by the federal government of Nigeria or guarantees from foreign banks like standby letters of credit. Loans currently secured by the non-exempt foreign currency collaterals must be wound down within 90 days. Otherwise, they will face a risk weighing up onto 150% for capital adequacy ratio computation alongside other regulatory penalties. This move underscores CBN's effort to regulate foreign exchange exposure in the banking sector and maintain financial stability. Moving on from the banking sector to aviation, where Minister of Aviation Festus Keyamo, in a bid to boost Nigeria's aviation sector and support local airlines, announced significant revisions which are aimed at preventing courts from blocking aircraft reclamation by lessors in lease breaches. These reforms, designed to align with global standards such as the Cape Town Convention, seek to streamline the process and enhance efficiency. Following discussion with representatives from Airbus and Boeing's aviation working group, Minister Keyamo underscored the importance of facilitating a smoother aircraft recovery process. The proposed charges empower the Civil Aviation Authority to expedite asset recovery within 5 days, while also mandating courts to resolve disputes related to lease breaches within 10 days. During a recent visit to France, Minister Keyamo reassured Airbus of the security of 524.7 naira for import duties, which are steadily decreased to the current lower rate. Similarly, such policies as regulating access to foreign exchange for international oil companies and commercial banks have helped stabilize the market. This has led to a welcome convergence between the official market rate and the previously stronger parallel markets. We'll take a break and we'll return.
My name is Yinka Babalola.
My name is Ijoma Pelokoro.
My name is Joshua Hassan.
I am Rotarian or Mosunde Lawson.
It's Ife Yunwarita Ejeze. My friends call me Ife.
My name is Rotarian Lola Dare.
I'm inviting you to keep watching SOUQ News. It's the right station to tune to.
I like SOUQ News. SOUQ News is good.
I want to charge you all to listen to SOUQ News, watch the news.
You can have unlimited news first time.
Find SOUQ News. Be with SOUQ News. Never switch off. You are better for it. SOUQ News is the real thing.
Listen to their coverage, and you'll be glad you did.
Turn to your YouTube, turn to your Instagram, turn to all your digital channels and look for SOUQ News.
Keep watching.
Keep watching.
Please, guys, keep watching.
SOUQ News.
Broad Street. Broad Street, situated in Lagos Island, is steeped in Nigerian history. Once the biggest financial hub of the country, it housed the headquarters of major banks, linked the CBN, the stock exchange, and the loads of lender companies. Broad Street is a historically significant street. It has played a central role in the development of Lagos and history, an important commercial and administrative center for the British colonial authorities. It was also a home to some of the city's earliest modern buildings. Broad Street was a residential area in the pre-colonial era. With the British came the Methodist Boys High School in 1878 and the Broad Street Prison in 1882, renamed Freedom Park. The General Hospital, which was a British military hospital, was built in 1893, being the first general hospital in Nigeria. The old British Secretariat building, which is now the Federal Ministry of Justice, was built in 1906. Broad Street has seen a full turn into modern commercial office blocks, complexes, skyscrapers, and markets from the Outer Marina through Akpombo early into the Adeliji Adele Road. Broad Street is one of the busiest streets in Nigeria on weekdays, where commercial activities take place day and night. From modern buildings to ancient structures, this street gives one a raw dose of life in Lagos.
Welcome, and you're still on News Hour on SOUQ News TV. So moving on to the financial sector. Guarantee Trust Holding Company, GT Co. PLC, has reported a profit before tax of 609.3 billion naira for the year ended December 31st, 2023, according to the audited, consolidated, and separate financial statements. The figure represents a significant increase of 184.5% compared to the 214.2 billion naira recorded in the corresponding period of the previous year. The company's audited results were disclosed to the Nigerian Exchange Group (NGX) and London Stock Exchange (LSE), showcasing robust financial performance and growth in profitability over the reporting period. In the same vein, UBA Nigeria PLC has unveiled its audited financial results for the year 2023, showcasing a gross earning of 2 trillion naira. This figure represents a substantial leap from the 835 billion naira recorded the previous year, positioning the bank at the forefront of the banking sector in terms of earnings for 2023. The bank's financial performance for the year was particularly impressive, with a profit after tax reaching 607.696 billion naira, up 257% from 170.277 billion naira in 2022. Significant financial highlights include a 139.5% increase in gross earnings and notable growth across various financial metrics such as interest income, net interest income, and trading and foreign exchange gains. Additionally, the bank saw substantial increase in customer deposits and loans and advances to customers, alongside a remarkable expansion in total assets, net assets, and retained earnings. Dangote Group says it is proposing a dividend payout of 511.215 billion naira for the financial year 2023. This translates to a generous 30.00 naira per share, representing a 50% increase compared to the last year. This decision reflects the group's strong financial performance, The company's profit after tax grew 19.7% year-on-year to 455.58 billion naira, driven by a significant increase in revenue, up 36% to 2.221 trillion naira. Shareholders who are registered by April 15, 2024 will be eligible to receive the dividend, subject to approval at the upcoming annual general meeting. The payment will be made electronically on May 31, 2024 for shareholders who have completed their e-dividend registration process. The National Bureau of Statistics says the tax contribution from Nigerian traders and mechanics surged by 98% in 2023, reaching a record 253.07 billion naira. This increase compared to 127.89 billion naira in 2022 signals robust economic activity and improved compliance within the sector. The rise in value-added tax and company income tax receipts drove the growth, with value-added tax revenues doubling to 138.10 billion naira and company income tax collections nearly doubling to 114.96 billion naira, despite inflationary pressures which saw VAT and CIT rise due to increased prices and reported revenues. Efforts are underway to streamline taxation. Initiatives like the VAT Direct Initiative and the Integrated Market Revenue Management System aim to simplify tax collection and reduce the burden on small businesses. Plan to cut down on unnecessary taxes offer hope for a more efficient and business-friendly tax system. Moving ahead, the United Nations Development Programme has offered 200 million naira in support to micro, small, and medium enterprises in Bayelsa State, according to UNDP. The objective of the initiative is to mitigate the effect of current socio-economic challenges through the empowerment of medium and small businesses across various sectors. The leader of the UNDP team, Joyce Oboro, who presented a check to Governor Duro Diyi at the Government House in Yenagoa, remarked that the European Union was a co-sponsor of the project. The components of the program include financial support and capacity building, while the cluster-based approach will be adequate to achieve set objectives. Oboro expressed optimism that the project will stimulate economic growth and improve the standard of living of Bayelsans and urge well-meaning groups and individuals to key into the project. World Bank's African Pulse report released yesterday revealed that sub-Saharan Africa is poised for economic growth over the next 2 years, with a projected expansion of 3.4% in 2024 and 3.8% in 2025. This upturn, driven by falling inflation and increased private consumption, is expected to be led by the robust growth in the East African Community region, particularly in Kenya, Rwanda, Uganda, and Democratic Republic of Congo, with a forecast growth rate of 5.3% this year. However, despite this positive outlook, the report noted that the pace of the recovery remains fragile, especially considering the impact of COVID-19, the Russian-Ukraine conflict, drought, and conflict across the region. Economic rebounds in key economies like Nigeria, South Africa, and Angola are projected, but are not expected to significantly impact poverty reduction as growth rate remains modest. We'll take a breather, and when we return, more stories are there for you. Do not go anywhere.
My name is Yinka Babalola.
My name is Ijoma Pelokoro.
My name is Joshua Hassan.
I am Rotarian or Sunday Lawson.
It's Ife Rita Ejeze. My friends call me Ife.
My name is Rosemary Lola Dare.
I'm inviting you to keep watching SOUQ News. It's the right station to tune to.
I like SOUQ News. SOUQ News is good.
I want to charge you all to listen to SOUQ News, watch the news.
You can have unlimited news, first time.
Find SOUQ News. Be with SOUQ News. Never switch off. You are better for it. SOUQ News is the real thing.
Listen to their coverage and you'll be glad you did.
Turn to your YouTube, turn to your Instagram, turn to all your digital channels and look for SOUQ News.
Keep watching.
Keep watching.
Please, guys, keep
glad to know that you're still there, but do not forget to like, comment, share, and subscribe to SOUQ News TV across all social media platforms. And we appreciate you for your efforts. All right, to the rest of the story. The International Monetary Fund, IMF, says it has reached an agreement with authorities from Ivory Coast on a review of 2 lending programs, paving the way for a disbursement of $574 million upon approval by the IMF Executive Board. Ivory Coast performance under the $3.5 million Extended Fund Facility EFF and Extended Credit Facility ECF program, as well as the $1.3 billion Resilience and Sustainability Facility RSF program, were deemed satisfactory by the IMF, as staff-level agreement was achieved on all policies and reform measures aligned with the program's objectives, including fiscal consolidation targeting a reduction of the fiscal deficit to 3% of gross domestic product by 2025, along with additional structural reforms. Once approved by the IMF Executive Board, these agreements would enable the disbursement of the combined $374 million to Ivory Coast. The Senegalese community in Lagos State have congratulated the new Senegalese President Bassirou Diomaye Faye in an executive interview with SOUQ News in Lagos yesterday. The president of the Senegalese community, Mr. Madoke Sene, pointed out that the victory was by popular choice.
The Senegalese people, make a vote for this Bassirou Diomaye Diakhar Faye. Yes. And that time too, all of them are in the prison. But people say, okay, no problem. These people, maybe they will release this man, Bassirou Diomaye Faye, so make it free. So no problem. So you vote for Bassirou Diomaye Faye. Because you know why? They need changing. Who can bring that changing? It's the opposition. Not be the government in power. Because they say when they select the candidate, Amadou Ba is the first minister of Macky Sall. But people say, okay, if they vote for this Amadou Ba, it's going to be the same thing. And it's truth.
And now Zimbabwe took a significant step in its monetary policy by introducing the Zimbabwean gold ZIG currency, replacing the struggling real-time gross settlement dollar with an initial exchange rate of 13.56 to $1. The move aims to tackle the persistent issue of high inflation. Bank balances were seamlessly transferred over the weekend, with citizens given 21 days to make the switch. The central bank's strategy to anchor ZIG with a composite basket of foreign currency and precious metals, mainly gold, has garnered attention and optimism, while challenges remain, including widespread adoption and addressing underlying economic issues. The launch marks a proactive effort towards stabilizing the economy. And away from Africa, Malaysia has urged Meta, operator of Facebook and TikTok, to enhance monitoring of their platforms following a surge in harmful social media content reported this year, with the government referring 51,638 cases to the platforms in the first 3 months of 2024, compared to 42,904 cases for the entire previous year. The Communications Regulation and Malaysian police emphasized the need to restrict the spread of content related to sensitive topics such as race, religion, and royalty, and also called for curbing coordinated, inauthentic behavior of financial scams and illegal online gambling. Malaysia, a country with a diverse ethnic makeup and sensitive society issues, has laws prohibiting seditious remarks or insults against the monarchy, prompting increased scrutiny of online content. The government's actions have drawn criticism regarding freedom of speech protection although authorities maintain the need to safeguard users from online harms. Meta and TikTok had previously restricted a significant number of social media posts and accounts in response to government removal requests in 2023. The CEO of Hong Kong Monetary Authority, Eddie Yong, has revealed plans to enhance investment connections between Hong Kong and mainland China, especially focusing on bolstering southbound activities, allowing Chinese investors access to Hong Kong's financial markets. Speaking at the HSBC Global Investment Summit, Yu emphasized the need to deepen existing schemes, although specifics were not disclosed. He hinted at potential expansions such as extending eligible investor classes to asset managers, insurance companies, and pension funds in China. The move aims to leverage Hong Kong's platform for global bonds, building upon initiatives like the Bond Connect launched in 2017. Amidst economic challenges and decreased initial public offerings value, Julia Long, head of Hong Kong's securities watchdog, highlighted additional measures to enhance market competitiveness, including lowering transaction costs and improving initial public offering pricing processes. Shin-Etsu Chemical, a leading Japanese semiconductor material manufacturer, has announced plans to invest approximately $545 million in a new factory in Guangzhou, Presidio, to bolster Japan's chip supply chain. The facility will focus on producing lithography materials for chip making, with the initial phase of investment scheduled for completion by 2026. This strategic move aims to meet rising customer demands and enhance production diversification. Shin-Etsu, known for manufacturing lithography materials such as photoresist and photomask blanks, already operates facilities in Niigata Prefecture, Fukui Prefecture, and Taiwan. The company will finance this new venture internally. Japan is witnessing increased investment in its semiconductor sector, crucial for defense, automotive, and electronics industry, with government backing to expand domestic and foreign chip makers' production capabilities. Industrial metal prices continue its upward trajectory on Tuesday, fueled by expectation of a resurgence in global manufacturing activity. These increases come amidst cautious optimism in Asian markets ahead of key events such as the release of U.S. inflation data and a pivotal European Central Bank meeting later this week. In Shanghai, the most actively traded May copper futures soared over 1% to hit a record high, while zinc and tin reached multi-month peaks and aluminium hovered just below Monday's two-year high. Despite challenges in China's property sector, iron ore prices stabilized above $100 a ton in Singapore. Vinh Veranathan, the head of economics of Mizuho Bank in Singapore, remarked, "It's largely a bet on China," coinciding with a global manufacturing upturn which bodes well for China's industrial recovery. This narrative extends beyond China and encompasses broader outlook for metals. Monday's data revealing higher than anticipated German industrial production in February further fueled optimism in the sector. And lastly, HSBC Holdings, a UK-based financial service provider, has announced plans to sell its Argentina business to Grupo Financiero Galicia for $550 million, reflecting the bank's strategic focus on strengthening its core expectations in Asia. These moves align with company's current Asia pivot strategy, directing capital particularly inwards India and China. As part of the deal, the company anticipates a $1 billion pre-tax losses in the first quarter of the fiscal 2023. The decision to diverge from Argentina is motivated by the business' primarily domestic focus and its limited integration with HSBC's global network, which results in significant earnings volatility due to currency translation. Buenos Aires-based Grupo Francesco Galicia, Argentina's fifth largest bank, will acquire HSBC Argentina. HSBC chairman Mark Tucker recently confirmed that the much speculated spin-off of Asia's business will not occur, despite previous shareholder discussions and proposals. And that's all there is on today's News Hour. Do not forget to follow us on all social media platforms at SOUQ News TV. I am Juvi Ufiene. Many thanks for watching.